The Rebel Capitalist Show.
We always say buy things when they're cheap and sell them when they're expensive. But what on earth right now is cheap? We've got Tim here, and he invests all over the world. He's been doing this for many years. So he's going to outline what he's investing in, what he's looking at right now across the entire world that is actually cheap.
Okay, so I'm a pretty traditional value investor, and I'm looking to buy things that create good returns on capital. I mean, that's my first objective. I want to buy a quality business that's generating, somewhere in the teens for every dollar that it employs in its business, and then I want to buy that at a low multiple of equity value. I mean, more people probably thinking in terms of price earnings and earnings yields, things like that. I'll give you an idea. I'm headed back to Tanzania on Friday. Actually, I just booked the tickets, and one of the banks I own there is trading at between 2 and 3 times earnings, and about half book value, yields in the low teens. There's a cement company I own there that's trading between 5 and 6 times earnings, yields about 13.5%. And these are not little fly-by-night businesses. These are the dominant companies in their industries in the country. And unfortunately, there's not many of them. It's a small market. There are about 17 listed stocks in Tanzania, and only about half a dozen of those are large enough for me to be interested, but they're trading at these incredibly attractive valuations. Now, there are reasons for that, and obviously macro factors are very important in these frontier and emerging markets, as you well know. Perception of the risk that exists, to me, is much greater than the actual risk, however, if you delve into it. I mean, you've done stuff in Colombia. I'm sure that people that don't know, and then you say that you're running around doing stuff there, they probably say, "Oh, are you crazy? The risk must be enormous." So in Tanzania, there's political issues at the moment. There's a lot of Westerners that don't like what the current administration's doing. But to me, that's all just noise. And if you're focusing on the long-term value of these businesses that are just pounding out returns, as I said to my brother-in-law, I don't really mind if they don't go up in price anytime soon, because if I'm collecting dividends in the low teens, I can afford to wait a long time for the macro perceptions to change and for the money to come back in. But
so
Tanzania,
what's the currency risk there, though, Tim?
Yeah, so that's the big one. Currency and then liquidity. It's hard to get in and out of these things without moving the prices too much. And currency, it tends to depreciate slowly over time against the US dollar. In the case of the Tanzanian shilling, they use the shilling there. But it's not a case of crazy gyrations the way that you have in some of the commodity producing countries in Africa. Angola, Nigeria, very dependent on oil, and Nigeria at the moment has currency issues, and it's actually a market that I would like to invest in, but I can't touch it at the moment based on my rules and the instability with the currency. But going back to Tanzania, it sort of depreciates at a couple of % a year if you work it out over long cycles and you smooth it. And I say to people, we just have to factor that in to our model. And if we're looking to compound our money at around 15% per annum, which I think is possible in a market like that, then we, in US dollar terms, then we just need to compound it at 17, 18% in local terms. And then by the time you translate it back, you're still doing fine. I mean, give you an idea, people think Tanzania must be, sort of a crazy place in terms of the macroeconomic fundamentals. Not really. The government bond there, the long bond yields about 14%. Inflation rate is between 3 and 4. So you got a 10, 11% real yield. The debt to GDP ratio is only about 35%. I think it's just gone above 100 in the US. So it's 1/3 of the level in the US. No crazy inflation. So for the moment, certainly it's stable. And, that is obviously something that you're cognizant of as a frontier investor. You got to keep an eye on the macro and make sure that things aren't about to go pear-shaped. But I just don't see that in the case of Tanzania. One of their biggest exports is actually gold. So at the moment, they're in a pretty good spot. Tanzania and Ghana are the two big gold exporters in Africa. And tourism isn't doing so well because of the COVID-19 issues. Tanzania is open, but a lot of the neighboring countries are not. And obviously people that would ordinarily go on holiday in Tanzania and spend lots of foreign exchange there, Europeans, Americans, they aren't going because of the quarantine requirements when they return home. It's not that Tanzania has said you can't come, but there are issues at the moment. So tourism is down this year, but gold is way up. And the other big export that they have is agriculture. So it's a fairly balanced economy. It's kind of like a three-legged stool in terms of the foreign exchange earnings. And there's only one leg that's a little bit iffy at the moment, and that's tourism. But it'll come back. These things have a way of righting themselves.
When you're doing this research, and I'm assuming you kind of take a macro, like a top-down approach. The first thing you start with is you kind of look at the fundamentals of the country itself, and then once there's something there that crosses or comes onto your radar, then you're like, okay, let me dig a little deeper and see if there's some companies here that I really like. And then you start looking at the individual balance sheets, the P&Ls, and all those things. Is that kind of your process? And if so, how do you scan for these countries? How did Tanzania come across your radar?
Yeah, so I have I guess you call it a barbell approach, has become the fashionable term, in that I focus a lot on the macro at the one end and then a lot on the micro at the other end. But without the right macro conditions, you're right, it's pretty useless digging down to the micro level. So to give you an idea, at the other end of the scale, I mentioned Nigeria at the moment is a problem for me because that big macro factor, the foreign exchange rate risk, basically means that I eliminate it for the time being from my list of places where I want to do micro research. Same in Zimbabwe, which unfortunately, great country, but terribly governed and has been in hyperinflation now for the better part of a decade. It's also a market where I just can't touch the local stock market. Even though the stock market's actually gone up a lot in recent years, that's in local currency terms, and no one really knows what the Zimbabwean currency is at the moment. Some say it's dollarized, some say that they're on this RGTS thing that they brought in. I mean, it's a total mess. There's a lot of guys running around trying to bring in cryptocurrencies, actually, which is probably a conversation for another day. But it's also on the list of too hard to deal with from the macro. And then Zambia is the third country that's in my universe at the moment, which has a lot of issues from the macro. They've borrowed far too much money and far too much of it from China. So there's probably a risk of actually a sovereign default there. So basically it's a process of elimination. I cut out the countries that are too risky from a macro standpoint. And then the countries that are stable and their business conditions are reasonably attractive, I then go in and start looking at the local companies. And we have a universe of about 496 companies, I think it is, just under 500. And just one point that I want to make is I'm not looking at South Africa. South Africa is sort of like the 400-pound gorilla in this part of the world. Right. So my fund is focused on sub-Saharan Africa, ex-South Africa. So it's a bit like here in Asia back in the day when the emerging markets investors first started coming out to Asia. They would put Japan in a separate basket from the rest because Japan was so much further advanced and such a big market. But then going to the micro level, I like to say it's simple, but it's not easy. It's just hard work filtering through annual reports. And I have a philosophy that I go straight to the horse's mouth, as it were, and go to the company announcements themselves. It's great to read brokers' reports and other things after I've looked at the raw data myself and kind of formed an impression. That's my research process. I like to basically read announcements that companies have made to the stock exchange, quarterly filings, whatever it is that they're required to do from a statutory standpoint, and reading, the annual reports that they've put out on their own websites, and get a feel for it that way. There are a few good screening tools as well available online, that don't cost too much. A lot of people are kind of surprised that as a professional money manager, I don't use Bloomberg or anything like that. There are a lot of guys who are addicted to their Bloombergs, and they'd be totally lost without them. For one reason or another, I never developed that habit, and I have various other sources online that are, as reliable. They're just not as easy, I guess, to get all the information in one spot. But over the years, I've built up a whole bunch of resources. And for these frontier markets, you go into stuff that people might be using, Yahoo Finance or things like that. They're not going to help you. You got to really find the data in more specialized databases. There are portals where you can go and pick up the micro information for analysis without having to sort of jump around from each country's stock exchange to the next.